Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Hope you had a nice weekend, and let's see what we have here. First of all, the weekend trade hit TP1. Happy day if you traded it. I will journal it, of course, but since it was just TP1, it's not closed for now. I think I also have to add 1 or 2 trades as I forgot to put them in, but that's fine. It's just the example journal with the trades I shared with you. In my main journal, all trades are documented. With that, we're actually coming close to the list end on this journal, so far with over a 90% win rate. But I don't front-run the final result. We'll see how it ends. By the way, if someone wants this basic journal, it's available for Patreon members, where you can also get my monthly stats sheet. More stats will be added to this collection as well. So feel free to join. You can choose between the normal updates tier, the Rabbit Box strategy, or both together. Feel free to read through, and I'll be happy to see you if you're interested in learning more about what I'm doing. Okay, now let's have a look at the chart. First, the 2-week chart. We had a candle close this morning. It closed inside the previous breaker, or let's say SR level. What to look for now is simply whether the next 2-week candle can close above it or below it. On lower time frames, this level can provide reactions, as we can see if we jump into the 1-hour chart. First, it acted as resistance. Then price slowly found acceptance inside, flipped it to support, and we saw it moving to the midpoint. Now we see a rise. The higher part is still untouched for now, and that's also where a few more levels come together. The previous SR level of the earlier range, the point of control, some structure stopped sitting there, and the channel that we drew when price was at our point of interest down below. Definitely a level to watch, but the more time we spend away from the lows, the lower the chance to make a new monthly low. I shared a few thoughts about this in Discord and the Telegram group, so feel free to check them out. To say it in short form, price would actually need a really strong volatility inflow to dump below the monthly low. Yes, the chance is always there. That's what the stats say. But for now, it becomes more and more unlikely. For example, based on some stats, there's around a 17% chance that the monthly low will be taken out if it happens today. After today, the chance drops to just 1.2%. That means yes, it can still happen, but do I go with the 1.2% or with the 98.8% probability? I think the answer is obvious. So until proven otherwise, as it stands now, the chances are higher for a positive monthly close. That means closing green. And if that happens, we'll enter the next quarterly with a positive September close. As per history, at this stage we'd be in the end phase of the cycle, as long as the cycle continues to play out, of course. Looking at history, we also see that the next month has a high chance to close positive, which would give us a positive quarterly close. That just adds more confluence to what we already had before. The hash statistics, the stats showing the top is not in, the Rabbit Box targets near the all-time high, and only a very small % chance to fail. Anyway, people should understand what statistics mean. This is not a 100x leverage play from here. One should always look for signs of strength or weakness to confirm either idea. With that said, let's mark out the averages for today. Also mark out the levels, and see what we would need to see for strength, and where weakness would come into play. So, on the higher time frame, we have a few levels to watch in case we get a retrace at all. The week just started, of course, and tomorrow we'll have the Monday range set, which usually provides more clarity on whether we're inside, below, or above it. For now, we simply use more or less the same levels we had before. First of all, we have our 12-hour order block. I already mentioned it over the weekend. That's where we had our trade from, which hit TP1. That's basically our first base to watch. Wicks down are fine, for example, to the old weekly level that sits slightly lower. But what we then need to see is a reclaim back above this order block for signs of strength. If it fails, then simply it's an SR level together with the old weekly. So if both get flipped bearish, then I'd look for the next support level. That's a mix of the daily order block and the 3-day breaker. If we extend it to the left, we can see it's simply an SR level. That would be the first area to watch for a potential reaction, again, if we get a retrace. I'm not blindly shorting into that level just because it exists. First, something needs to happen, mainly losing support. Until then, it's just preparation. In case price gets there, I already know what to look for. For example, if we get a rise first into the higher resistance and then rejection there, this area could become the next higher low area, and we'll look at it when and if the time comes. For the upside, there are actually not many changes either. On the rise, I said that structurally, if there's a level to watch, then it would be this one on the left side. Because locally, we had no swing high on the way up. What happened instead was just shorts getting trapped into positions while price kept moving higher, mostly over-leveraged people who missed the bottom. Always the same story. They're bearish down there, then still bearish on the move up. In one of my posts, I already mentioned that this would just act as fuel for more upside. So, if I would consider a short, it would need a strong reason, and structure would need to confirm it. Since that hasn't happened, there was simply no short on all of this rise. If price breaks above that level, then we could easily see higher prices. So here, it's basically the same story I've been telling for some time now. Now let's check the structure levels. Before I forget, yes, based on the averages, we could see a move down to retest the previous SR level. But again, for that to happen, we'd need weakness. If there's none, then I'm not aiming for that level now. And for the average gain, it would simply be continuation of the uptrend we currently have, and that would mean a tap into the resistance level above. Structurally, locally, we still have the 1-hour swing low, which ends up in the same place as before, as long as we don't build a new range above us. So for now, no changes. I'd only update it later if new structure develops. That means to keep structure intact, we want to see a higher low, or worst case, an SFP of this level. Best case, any move down would look corrective, like a 3-wave move. In that case, I'd first look for an SFP. If instead it breaks down impulsively and bearish, then the next level comes into play. Our weekly level with the breaker. That's a level I'd consider for a potential scalp. But as I said at the beginning, what really matters is watching for a reclaim of the 12-hour order block for strength. That also means if I take that trade, I'd pay myself on the rise. If it fails and starts acting as resistance, then we go to the next level below. For the upside, if I'd consider a scalp short, best case would be for price to first hit the higher level and then start losing support and breaking structure down. That would be a local short scalp idea if I'd take it. But as I've said, for now, I'm happy with my longs. We already hit our bigger TP1, so I don't really feel the need to jig as a hedge or anything like that. I'd rather wait for better setups, the ones that fit my style more. That doesn't mean someone else can't make money on different setups. But simply, for me, right now I have no short, even if that means I miss the move. On the yearly chart, we can see price now trading between the upper resistance and the trend timeline for the year together with the yearly circle. As I mentioned in the previous video, we could easily see price grinding along these levels, whether from the lower part or from the higher part. Since it already broke above, we've now seen it grind for 3 candles exactly at this level. That makes this chart very useful to have, and I'd recommend it. I also showed in one of the videos how to draw it. For me, it's a must-have chart, useful for yearly timing, for SR flips, and for situations when price meets time. So for now, as long as it stays above the circle, to put it simply, we could see it grinding down along that line if we get a retrace. The upper part, however, is resistance for now. Also, we're coming into the FOMC meeting this week. As I've said before, usually we get some kind of reaction about 10 days on average before the event, or right on the date itself. Well, 10 days before this one, and even earlier, we had a corrective move down, and then on the average timing, we saw our higher low form. From here, we need to watch carefully what happens on the actual date itself. Since it's on Wednesday, it's very soon, so keep an eye on that. So having a look at the 5-day EMA setup that we talked about last week. By the way, the 10-day will also trigger 1 in 2 days. But for that, we'll come back later to see where it closes. For now, the 5-day has fired a long setup. As mentioned before, I don't trade them directly, but I use them as confluence. What we can see here, on the winning side, it has an average move of around 28%. That would bring Bitcoin roughly to 148K if it starts to rise. And since these setups often catch the big moves, the average of 28% up to 148K is fully reasonable if it plays out. On average, it takes around 9 bars, which would basically be by the end of October. On the losing side, we have an average move of around -5%. That would bring Bitcoin down to about 109K. Of course, some are bigger moves, some are smaller, but I think all of my viewers understand that very well, so I'm happy about that. On average, the losing trades play out around 2 bars, which means by the end of this month, around September 23 to 25. So if we don't see a hard rejection by then this move has real potential to play out further if the conditions are met. The longer it stays above this level, the better the chance also to close September green, which would then lead into everything I mentioned before about a positive September close and the next quarterly open. So, interesting times ahead. Of course, for this setup, if it does turn into a losing trade, then the move down would most likely happen already this or next week, so within a 2-week time window. But even in that case, it would not necessarily lead to a bearish monthly close. Anyway, I'll keep you updated on that. So for now, price is hitting some local support. For me personally, I won't trade today unless something bigger happens. The trade I had on the weekend is actually good enough for me, because it was the kind of setup I'd normally take on a weekday. But as we can see, it played out really nicely. So here, locally, I'll just observe what's happening and wait. Right now, we see some crazy shorting. Must be NEO with 50 million shorts. Anyway, what to look for first is if this support holds. We have VWAP and the previous day equilibrium. And the next key area would be the 12-hour order block and the weekly open with the swing lows. Best case, of course, would be to look for trades on the extremes, meaning an SFP, because if that fails, then you know the next level is lower. And if trading now from here, then the stop loss can't be inside this support area, since a move into it is not invalidation. That's why, for me, I'll personally wait for New York or the Monday range to form and be picky with the setups. If there is no setup, I won't be led by emotions or FOMO about missing a move. I really don't care about that. Anyway, if you're trading this, watch out for VWAP here and this OB area for a potential higher low. If that fails, then the next levels come into play. And for the upside, I'd like to see the structure stops being hit. That's basically it for today. For me, no new trades for now. If you need clarity, please ask in the group. Also, feel free to join the Patreon for more updates if you want to learn more or simply support what I do. Until then, I wish you a good day, guys, and see you in the next one.